Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw. It is Tuesday, it's the 23rd of May, and I'm a senior market specialist at FXCM. I want to point out my email address, rshaw@fxcm.com. So if anybody needs to contact me, that's the email address to use. I'm going to go ahead and bring up our disclaimers. And here's the high risk investment warning. Hey Howard, morning to you. Nice to have you on the webinar. Thank you very much for joining. And I want to welcome everyone that's signed in today. Very much appreciated as always. I'll just keep this on screen for a few moments longer. All right, let's just bring up the market commentaries disclaimer. All right, and our reference is Market Scope and Trading View. Let's just bring up Market Scope first, and then I'm going to go to Trading View. I think something is happening in the markets that we've got to pay attention to. I want to start with the NASDAQ, and the reason I'm starting off with the NASDAQ is it's gone overbought. We spoke about that yesterday. We spoke about it on Friday. The FANG stocks, let me see if I've got the FANG stocks here. Yeah. So if I take a look at the FANG basket, that's very overbought. And we want to watch this overbought condition. I know we've spoken about it before, but I think it bears repetition here. It can't stay overbought for long. What is being spoken about in the market is something called an AR bubble. I don't think there's an AR bubble. I think artificial intelligence certainly is one of the factors driving technology. I don't think there's a bubble here. There is certainly an uptrend, a higher trough, higher peak. I think we do a correction that next high trough, but something is taking place that we have to keep our eye on, because there is potential fundamental changes here. And to highlight that, I want to bring up Trading View. Now, Trading View over here, we've got the US government 2-year yield, we've got the US dollar, and we've got the correlation coefficient between them. I'm going to change the US dollar just now to the NASDAQ, but let's just keep the US dollar there for the time being. I think it's all part of the same discussion. Take a look at the peaks and the troughs on the US 2-year. Let's put those in over here so we can put in a reference trough. Let's just call it T. Okay. Here is the reference peak. Okay, now this is a change up as of last week. Can you see the higher trough here? And once we've got that higher trough, can you see the higher peak from last week? That's a change in the underlying fundamentals. After the crisis of confidence in the banking sector, we had the 2-year yield drop markedly, and that was suggesting that we're coming to the end of the interest rate cycle. It does seem as if we're going into pause now, but the idea that we are in a sort of a downtrend for rates has changed. We're now in uptrend. So that's a fundamental change on the ground, that there is now a change up in the interest rate environment. Now, take a look at the US dollar. The US dollar is positively correlated to interest rates. In other words, it moves in a similar direction to the 2-year yield. And whilst the correlation here is not quite as strong as it was, say, back at the end of last year, it's still positive. It's 52%. In other words, if the 2-year yield carries on moving up in this uptrend, and the correlation holds, it's going to pull the US dollar up with it. Okay, let's go back to NASDAQ now, because NASDAQ's also sensitive to interest rates. So let's go ahead, change this US dollar to NASDAQ 100. We'll just use the FXCM instrument here. And let's change the correlation coefficient. NAS 100. Okay, and typically there is an inverse relationship between the NASDAQ and interest rates. Okay, in other words, as interest rates move higher, typically the NASDAQ should move in the opposite direction. It's had a strong negative relationship since the beginning of 2022. It's now at minus 42%. But as the 2-year is moving up, so is the NASDAQ. Now that doesn't make sense if there's an inverse correlation. In other words, it seems that there could be some sort of mispricing here, because interest rates theoretically should act as a headwind against NASDAQ. Let's just change this to the 10-year, US 10-year. So now we're looking at, instead of looking at monetary policy only, we're now looking at sort of the rates that are primarily determined by the investment side of the market. So let's go ahead and pop that in. And you can see the interest rate here is also tending to be negative. Okay, let's put in the peaks and troughs for the US 10-year. Just stick with me for a moment. Then we're going to do a little bit of the mathematics behind it. And then we're going to start looking to see if there are any potential trading opportunities. So let's put in the trough. Okay, that goes over there. Here's the peak. Here's the higher trough. Here's the higher peak. Okay, so again, if the interest rates are starting to trend up, how much further can the NASDAQ actually push in that environment, considering that we've got the index, let's change this to the NASDAQ, as overbought. You see that? So there's a technical headwind here, and there's a fundamental headwind. Now, the interest rate environment is interesting. It does look as if it's turning more hawkish. If it does turn more hawkish, we're going to have a real discussion about that. Where it's not so clear is on the real rate. So let's just bring in the real rate here, which is the 10-year minus break even. Okay, so let's just bring that in. And this is where it gets much trickier. It's not trending up per se yet. It's got this kind of broadening formation, which broadening formations are terribly confusing. They don't adhere to the rules of trend. An uptrend is a high trough followed by a higher peak. A downtrend is a lower peak followed by a lower trough. Broadening formations abandon that, so it makes the analysis quite difficult. But the real rate here perhaps suggesting the difficulty in terms of just finding the direction of rates, given that the market expects rate cuts towards the end of the year. let's see, the Fed officials have been very hawkish. They've been very hawkish. Let's keep an eye on these interest rate movements. Last week put them into uptrend. That's a change. That's a shift in the underlying fundamentals. All right. So given that rates are starting to move, are there potential opportunities? So let's go back through to market scope. Let's go through to the dollar here. Let's do a top-down analysis of the dollar. So you can see that on the weekly, the dollar has moved above 50. Okay, is this going to stay above 50? Well, if real rates are starting to get more hawkish, there's an argument to be made for that. Okay, there's an argument to be made for that. Now, let's go through to our daily chart here, and you can see on our daily chart here, we're sitting in the bullish area, zone 1. That's between the upper red and the upper blue. Typically, if there's going to be an uptrend, it's going to take place in zone 1. If there's going to be a downtrend, it's going to take place in zone 3. So we're in zone 1 between the upper red and the upper blue, zone 3 being the lower blue, lower red. So there is bullishness on the dollar. Let's go down to the hourly chart here. And here it's more difficult. What we need is some sort of angle and separation to the northeast here, okay? And we would need the stochastics to cross over. The stochastics at the moment are sitting in the middle of no man's land. We're sitting around about 50, so the momentum's neutral. So again, just as we suggested yesterday that there is this divergence between the risk on and the risk off markets, today we're getting, well, there is confusion. Where is that confusion? Confusion is we're moving sideways on the hourly and the stochastic is on 50. There is a bullish bias. There's a bullish bias, but we've got to see movement on the hourly. All right, let's go to NASDAQ because those are the two. We've looked at the dollar and we've looked at the NASDAQ. So let's just see if there is any sort of signals coming out from the NASDAQ side of things. Remember, NASDAQ is inversely related to interest rates. Okay, so this is, I think, a difficult analysis. We're in uptrend. Okay, we're overbought. We're in zone 1. We're overbought on the daily, okay? So the risk reward here is skewed, okay? So we've got to be mindful of that. It does look as if we're starting to get some give here. You can see that it looks as if we're going to get a cross down. We've got to just see if that's the case. It looks as if we've got a momentum crossover, stochastics cross down. And if the momentum or stochastic makes its way through to the lower quintile, then we could see the risk off markets taking some pain. If it's taking some pain, I would go back to the US dollar market and I would take a look and see if we're getting that upwards movement on the US dollar market. Theoretically, they should be moving in opposites, right? Why? Because interest rates are a tailwind for the dollar. They're a headwind for the risk on markets. We've said that the dollar's moving sideways. Just one more comment here. Take a look at the last candlestick. The last candlestick is a spinning top. What's a spinning top? Spinning top is a candle of uncertainty. All right, let's just take a look at one more chart for this morning. I want to take a look and see how DAX is setting up. So let's go through to the DAX. Okay, now before we even talk about the hourly chart here, the trend is up. What we did mention yesterday is we're starting to tend towards this overbought. So just NASDAQ's gone overbought, FANG stocks are going overbought. There is talk about this AR bubble. The interest rate movements are starting to act as headwinds. Okay, the DAX not quite in overbought territory, but we're tending towards it. Okay, we are in zone 1 here, but It does look as if we're getting some sort of cross down here. Okay. Sorry. Let me just get this. I want to grab this, put this here. Okay, so we're getting a EMA crossover. We're getting a stochastic crossover. If the stochastic makes it to the lower quintile, then we could see a risk off movement. The NASDAQ has led the risk markets. Now that the NASDAQ is perhaps looking a little bit top heavy, I think we have to be very cautious that a correction could ensue. Not only that, we've got to try and be quite savvy when it comes to what's happening with the interest rates, because the interest rates as of last week have shifted. They've shifted towards uptrend, and that to me means a change in fundamentals. It means that we've got to do we've got to be very cognizant of the mathematics behind it. I did say we'll take a look at the mathematics. Let's just reiterate what we're talking about with the mathematics. I won't spend too much time on this, but just remember that you've got present value equals to, this is the fundamental relationship, the future value, and then 1 plus interest rates. It's actually R, which is required rate of return, but we'll just call it interest rates to the power of time. In other words, there is an inverse relationship between interest rates. So as interest rates move up, it's going to potentially pressure the present value of NASDAQ to move down. We're not going to get more into the mathematics around that. We can explore that in more detail, perhaps tomorrow, perhaps on Thursday. But this is the sort of the mathematical equation that's driving the tailwinds, headwinds. It's called the time value of money. If there's any questions, please go ahead and type those in. Any questions, go ahead, type those in now. Otherwise, what we'll do is we will wrap up here. Okay, nothing coming through, so let's wrap up. I want to thank you guys for joining. It is very much appreciated as always. Have a good day, a good evening. We'll do it all again tomorrow. Tomorrow we'll have an extra webinar, the Crypto Minute. Thank you very much, guys. Speak to you then.